this video, I want to talk about an interesting life hack, an interesting way that will help you improve your results by half, at least double. And this is a simple way that many traders, not only beginners, but even professionals, ignore. And it will allow you to see the market more fully and analyze it more thoroughly, thereby improving specific entry points and improving the parameters of each of your trades. So, many people have heard of the risk-reward ratio, risk-reward ratio. And what is it? That, for example, we go into an up trade right here. Let's say we had a profitable one, and when we enter a trade, we must have a stop loss and take profit as a general rule. That is, our losses should be limited and our goal should be outlined up front in every trade. And let's say we set a stop loss at this level, below the support level of 100 pips. And the better the ratio of profit to that risk, the better. For example, if we set a take profit of 100 pips at the top, we will have a profit to risk ratio of 100 pips by 100 pips. That is, if we win, we earn 100 pips, $100, for example, if we enter with one lot, and in case of a loss, we lose 100 pips. We lose $100 in case the trade is unsuccessful. But what if that risk-reward of ratio is doubled? For example, we put the stop loss at the same distance of 100 pips from the lower point of the chart and take profit at 200 pips. In such a case, in a failed trade, we lose $100 minus 100 pips. And in case the take profit triggers, we earn 200. In this case, even if your strategy will be 50-50, i.e., half of successful trades, half of unsuccessful ones, you will still earn, because you earn more on a profitable trade than you lose on a losing one. And improving this ratio between profit and risk is one of the main tasks of any trader. The higher it is, the better. When it hits the 4-5 unit marks, you earn 4-5 times the risk you put on each trade, and that's a great ratio. In this case, even if 70% of your trades are at a loss and only 30 are in the plus side, a pretty bad ratio, you will still make money because you make a lot of money on profitable trades while risking a small amount. And that's exactly what we're going to work on, reducing the level of risk. In order to improve your risk-reward ratio, I recommend that you work on several different time frames. I will take the 4 and 1 hour time frames as an example, but you can take any adjacent time frame to simply improve the results of your analysis. To begin with, we go to the senior time frame, 4 hours, and this strategy will work great exactly when you use price action, that is, resistance support levels, trend lines, and so on. We have moved to the time frame of 4 hours, and let's set the demand levels here, from which there were bounces in previous times. We can label it here. Here's the first boundary and the second boundary a little bit lower on the minimums. As you can see, this is the zone where we have demand. This is the zone where we have buyers who are buying back the decline. We had a drop, then a bounce from that level, then another drop, another bounce, another drop, another bounce. We have other traders buy orders, concentrated here, and they are buying here, creating demand and pushing the price up. But if as a general rule, we will place a stop loss below the demand level. I mean, it's around here somewhere, right? And let's say we enter the trade at this point. We set the stop loss level right here. The difference here is about 150 pips. And we will set take profit at the values of the previous levels, i.e. approximately in this area. We now have a 2-to-1 profit to risk ratio. That is about 150 points. Here about 300 points. This is a good ratio of 2-to-1, but now I will show you how it can be improved. We move to the time frame below, 1 hour, and revisit our demand zone. In fact, if you look at it, let's choose a different color for the lines. If we review the real level of demand, they are actually a little bit narrower. That's where the real level of demand is. Its upper boundary, mark the new levels in red, and its lower boundary is about here. We can ignore these tails. We will set it like this. Let's If we switch back to the big chart, we can see that the new ones on the lower time frame, the demand level, are much narrower than right here. And if we enter the deal based on this zone of demand, we will put the stop loss not here, but below this level. More refined, more precisely selected. That is, our stop loss will be at 100 pips instead of 150. Moreover, since this zone is smaller by half, we can put stop loss and take profits further away. And if we set take profit at the same level, i.e., from the upper boundary here, it will be not 300 pips, but 350 pips. That is, with one simple action, we reduced our stop loss by 50 pips and increased our take profit. So, let's count from this point, not the blue one. Increased our take profit from 300 to 400 pips. That is, we had a profit to risk ratio of 2, and now we have a profit to risk ratio of 4 to 1, which is 4. That is, just by refining the location of our demand levels or supply levels if we're talking about resistance, just by doing a more pinpoint selection on the low time frame, we improved our ratio to 4 to 1. The trade is the same, but in the second case, when you expose those zones more accurately, you will make 4 times as much as you potentially lose on that trade. And with this ratio, even the worst strategies will eventually lead you to profit. Be sure to try this method with your strategy, and specifically in your case. You may not use support and resistance levels. The same principle will work with other indicators. For example, if we expose a parabolic and mark a point, let's expose any indicator, for example, ATS Parabolic. We've set the ATS indicator, we go to a higher value, right? Here we got a signal around this candle. That is, we have lost about half of the movement, and we will set the stop loss below these points. But if we switch to the 1 hour time frame, we got the signal not on this movement, but much earlier. Here we would enter the trade, and stop loss would be set at approximately the same level as on the time frame of 4 hours. Now, it's not enough that we've captured most of the trend and have basically made more profit. Our return to risk ratio has also improved, and be sure to initially set the value on the older time frames, then refine them on the younger ones, and then you will greatly improve your trading results.